Desi, welcome back. Ian, Lalit, Ian, thank you. All right, then let's start. Welcome to Tradespoon in Yellowtown. My name is Vlad Karpel. I'm CEO of both companies, and today we're going to have our live trading room open to trade stock and options using our technology. For those of you who are new, welcome. This is my brief bio for those of you who are new. I want to say thank you to everybody. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing it for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures are very important. Please read them. Trading stock and options involve risk. Not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, very important to just remind some of the main concepts in trading. One is the goal, right? The goal is to make money, preserve, capital, and become disciplined and confident trader, right? For some people, the order is different. What's on top, right? Usually, as you are progressing through your journey as a trader, discipline, confidence is more important. Usually in the beginning of the trading career or journey, you concentrating on income and making money. So it all depends. We all have different goals. But, at some point, I think it is important to prioritize how important it is risk management and disciplined trading, right? So to me, disciplined trading, how do you become a disciplined trader? It's something that you can do mechanically, right? Where you can write down on a piece of paper, give it to another person, another trader, and they can execute your trading plan. So very important to have it in writing. Very important to have risk management executed correctly, right? For me, risk management, it's number of positions and position size, right? And then you always go through this what-if scenario, what if market goes higher 5%? What if market goes lower 5%? What will my portfolio look like, right? Make it look very vivid, experience these moves, right, before they actually happen, to make sure you understand, how much money you're trying to make and how much money you're willing to risk to make that money. Right, so these positive and negative visualizations are very important. Keep in mind the economy of control, right? You can only control your actions and your own thoughts. You can't control, the outcome or actions of other people. And it's all about compounding investment, right? Compounding investment, set goals. Usually I trade S&P 500 stocks, not very volatile stocks. So I look for, anywhere from 0.5% gain, short-term 0.5% to maybe 2% gain. We're talking about a couple of days or a couple of weeks, right? For stock trading, for stock price fluctuations. Options, I look for 20, 30, 40% gain, and usually I hold them, more than a couple of weeks. Set reasonable goals for every week, right? 0.5% a week, 1% a week. And just remember that compounds, set goals week, quarter over quarter, year over year, right? Treat it as a business. and things will fall in place. So again, negative positive visualization is very important. Let's go over today's. So today it's all about CPI data, right? Came in better than expected. I don't know if it's updated. So core CPI year over year came in slightly better than expected, 4.9, but pretty big drop. I think CPI came, months over months came in 0.2 versus 0.3. You have services data continue to drift lower. So very positive reactions, at least as of right now, to the news. You have a pretty big drop in the 10-year yield, right? We kind of said this is a make or break scenario for the market, right? You can see that the yield, dropping because, was the idea that Fed is not going to raise interest rates as aggressively as before, right? That inflation is subsiding. And yield are dropping, and then the dollar also dropped precipitously, again, retesting year-to-date low, right? So these are main levels in the currency market, main levels in the yield. Drop in the dollar is very bullish for the market, right? That's why we see rotation into cyclical names. Oil is up, industrial is up, transportation is up. So this is make or break. If this level doesn't hold and we are continuing to drop, which is 50% retracement, next support is probably around 98 or even 96, then this rally will continue, right? At least rotation into cyclical names, right? So that's half of the story. The other half of the story is 10-year yield, right? So far, or 2-year yield. I mean, so far, we had a pretty strong rally since the March bottom, right? Due to liquidity issues in small regional banks, and we had a strong rally in yield, and that corresponded with a strong rally in equity markets, right? So if we do have a pullback, this correlate, we're not going to have for too long where the treasuries, right, TLT, continues to go higher and technology continues to go higher. So either the rates are going to stabilize, right, at least trade sideways or higher, right, sideways or higher, or, the QQQ is going to roll over, right, QQQ is going to roll over. Right now, we're still stabilizing, so we'll see. I won't make too many decisions, but definitely interest rates are dropping, dollar is dropping, market continues to go higher. The question is how much further can spiders go, right? We're at 446, 447, probably could get to 450, but I would still wait for at least a couple more days, right? And then earnings season starts, right? So now everybody's concerned about inflation today and interest rates. Tomorrow, the focus will shift toward earnings, right? Toward earnings. In terms of support and resistance levels for spiders, model sees 440 to be support, right? 446 overhead resistance. I would not chase the market at 446. That's where we are pre-market now. 440 is a better opportunity to enter. So buy 440. Overhead resistance 446. If we do break through 446, we will reach 450. Model actually doesn't see it. Model sees it as overbought. It doesn't see that we will reach beyond 446. We'll see. A lot of it is going to depend on earnings season tomorrow and Friday. So probably the same thing, right? So if you want to go, let's say you think 446, we have CPI data, model didn't count, better than expected inflation data, market can continue going higher to 500 or even above that level. Where's your stop level, right? your stop level, if you're day trader, I would have this week low around 436, right? Is your support number one, right? Model says 440, probably true, right? 440 is the gap. I mean, 440 is 1.5%, so fine. So 440, I would do 440 for if you're day trading, right? If you're holding position overnight, I would use 436. And then finally 432, 430, 432. So those are your three support levels, depending on how long you hold in position. And then you need to determine the size, right? If you're bullish on the market, we're breaking through 444. We're posting new year-to-date high. Right? We're very close to March rally of last year. That's where the March rally kind of ended at 446, 450. Then you need to determine the size, right? Again, on a $25,000, on a $10,000 account, 2.5%. So on a $10,000 account, 2.5% would be $250. So $250. If you're risking, if you 440, that would be 6 points, right? If you're doing 436, that would be 10 points. And if you're doing 430, that would be 15 points. Right, so 1.5%, 2%, or 3%, right? And then in terms of shares, you determine that $250, this would be 40 shares. This would be maybe 22 shares, 25 shares. And this would be 16 shares. So right, this is a stop loss, and this is shares. So just depending on what type of trader you are. Most common mistake, you say, well, 440, obviously that's the, this is the gap. And, by end of the day, market reverses, right? Because disinflationary environment could be interpreted in two ways, right? One is it's great, because, inflation is down and people can buy more, right? Or inflation is down because demand is down, right? And we're approaching recession, right? So inflation is also could be interpreted in two different ways. One mistake would be to buy 40 shares and then hold it till 430, right? And then if you buy 40 shares, you hold it to 430, you multiply that by 15, now you're down $600, right? You're down 6% on your portfolio. And then, I would grade myself, C and D, right? It could be 430, bounce back and go to 460. That's also happened. Or it can go to 430, break 430, and continue going lower. So then I would grade myself C or D. So keeping these trades in your journal, grading yourself are very important. Any questions? Market just opened. We are at 446, right? We're at upper range of the model. It could continue going. I mean, it's overbought. Market is extremely overbought. It could continue going higher because we do have new CPI data, and market participants are just kind of digesting. So far, yield is down, dollar is down, and QQQ is up 1%. Spiders is up 1%. Now, value is underperforming, so we have, kind of a small rotation from value to technology. Yesterday, it was the other way around. Okay, and you have, gold is down, gold miners down, silver is up, right? So it seems like everything is up today, right? Everything is indiscriminately up, including treasuries. At some point, it's, it will recalibrate, right? These divergences will stop, and, we'll have kind of regular correlation. Any questions? Klaus, good morning. Fred, good morning. Fred, maybe trim some of the hedges here. Trim some of the hedges here. I'm gonna personally wait for earnings, right? We do have earnings tomorrow, right? You know, Delta Airline, Progressive, Pepsi, right? Cintas, Festinol. We have some major companies already announcing earnings tomorrow. We'll see what the reaction is, and then you know, heavyweights in banking, you know, banking, investment banking, some of the regional banks. Money managers. So focus will shift to earnings. Focus will shift to earnings. Again, one day doesn't set a trend, right? Just because we broke above 444 right now, that doesn't mean by end of the day we'll not be below 443 or end of Thursday. Usually you want to wait at least 2 to 3 days. If we are trading above 444 for 2 to 3 days, then at least you have a new stop level, right? 444. Right now, 444 is not a stop level. I think it's 440, right? Just like the model said. So as long as we are, you know, right now, I think it's a little bit overbought. So if you close your hedges right now, you're probably kind of doing the opposite, right? You're, you know, you're going long, right? Closing your hedges, you're going long at 446. So I propose to go long at 440. So if you want to close your hedges, wait for some kind of a pullback. Okay. Thank you, Fred. Thanks, Fred. I mean, if you're down more than 2.5% on some of these hedges positions, right, or you're down 10% on your overall portfolio, then yes, I would trim the hedges. If you're down 10% because, you know, I anticipated the market to be, you know, to pull back significantly, so I put a lot of short position. Now I'm down more than 10% in my portfolio, I would definitely trim hedges. You know, if I'm down even 5% of my portfolio, I would trim the hedges, right? Because I don't know, we can get to 500, we can get to, you know, 450, we can get to 455. But if you're not down, you know, you actually, if you're up right now or you're neutral, then I would maybe, you know, I would wait. All right, let's see what else is interesting. Meanwhile, all right, so yield down, dollar down, that's the same. We talked about that. High yield is up, you know, high quality yield is up, low quality yield is up, value underperformance, semiconductors are leading, small caps are leading, ARC leading, gold miners, silver are leading. Let's see, Germany is up and Europe is up. China is up. So we have a kind of a cross. Crude oil also retesting June high, trying to break through this level, and so across assets, let's see, we have a rally across all asset classes. Europe, Germany, China, home builders, metals, miners, energy is up. Defense underperforming, but small caps, consumer discretionary, retail, transportation, all leading the market higher. Okay. So let's review some of the positions and see if we want to adjust them. All right. So one is silver. So I've been trading around this position. I bought at 21.25, end of June. Let's see. I wanted to trim silver because that relationship doesn't make sense, right? Either silver is going to continue going higher, and the market is going to pull back, or vice versa. right? Or silver is going to drop and technology, right? Because right now the correlation since May, silver is down, technology is up, and market is up, right? It's kind of been using as a hedge. Now silver is up, right? It's trading like a metal, and market is, breaking through all-time highs. So that's a divergence. I mean, I'm not going to close the entire position, but I am closing. This position. 21.25. It's a 22.75 cents. It's 3% move. Okay, I'm going to close that trade. So partial close. Okay. So that's silver. And again, idea of dollar cost average. If we drop to 200-day moving average, that's a great, right? Then, I don't mind buying it at 200-day moving average. I think long-term, silver is still a good buy. But, right now, it has to hold the 50-day moving average. If it holds 50-day moving average, today, tomorrow, Friday, Monday, okay, then we're probably going to retest 52-week high, 24. But for now, one day doesn't set the trend. We need confirmation, usually at least a couple more days. So for now, I'm just trimming some of my long position, and let me see. I do have an order. Just want to make sure that I have an order for silver. Yeah, so people 22.90. So next one is 22.90. If it does hold this position, then yeah, we're probably going to get 22.50. Let's change this to 22.50. So people are not confused whether I'm partially closing it or closing it completely. 22.50. Okay, so that's silver position. Apple, bullish Apple short term. I mean, short term, obviously, especially if the earnings are better than expected, then Apple will rally. So far, the bullish trend, uptrend is intact. It's bouncing back, so I'm still long Apple. Small caps, again, very sensitive to a dollar make or break setup, right? Either dollar is going to break through year-to-date low, or small caps are going to continue, break through February year-to-date high, right? We're approaching year-to-date high. Potentially, we can get to that level, but it all depends on the dollar, right? So all eyes on the dollar. I think dollar will hold, right? Because I'm bearish on the market. But, it's kind of the line in the sand, right? Usually it bounces back, right? It bounced back in February. It bounced back in May. I think it's going to bounce back in July. So for now, I'm gonna wait a couple of days. I mean, so far trade is going against me, so I have to make a decision. PPG, again, short-term trade, active trader or aggressive power trader, right? We talked about, some of these trades. This is actually delayed. It's not delayed. This is from yesterday. Let me refresh for today. So again, mostly it's this was before CPI did, right? Posted last night. So Emerson Electric, Industrial, Switches, Fortinet, JP Morgan, MasterCard, Oil, Nucor, all of these stocks are breaking, I think, 52-week highs, right? Or reaching 52-week highs, whether it's a steel like Nucor or MasterCard, right? Or JP Morgan, right? Going into the earnings. So obviously broad-based rally, right? Broad-based rally, a lot of stocks are breaking out. this is where kind of Bob always asks the question, where are you going to change your mind, right? This is, kind of a make or break scenario. If dollar collapses and continues to drop, if we have a broad-based rally across all asset classes, as earnings season unfolds, then yeah, I'll probably have to get more bullish. So this is kind of that probably next couple of weeks, because we do have a broad-based rally, and you can see it by the model is detecting not just, it used to be just the tech stocks, but now it's banks, it's credit cards, it's oil, it's steel, kind of a broad-based momentum. So PPG continues to trade higher, right? That's a short-term trade, similar to the other aggressive power traders. Kind of a clean breakout. It's reversing slowly, 151.32. It's meant to be a short-term trade. I bought it at 147, $4. This is what, 2%, 3%. I think it's time to close it. So, and we can initiate a new one next week, 151.20. Okay, so I'm out of PPG. I mean, same idea, right? The model detected this trade. I held it for 3 days, right? It had a nice move to the upside. You can hold it, right? Because, as I said, all cyclicals are kind of moving in the same direction, whether it's PPG or MasterCard or Caterpillar, they're all going higher, right? Nucor. If there is a reversal in the market, they're all going to go lower, right? In very similar fashion. I mean, we have earnings season, so there will be exceptions, right? If JP Morgan hits a home run, they will rally. If Wells Fargo, doesn't hit a home run or misses estimates, then they will go lower. But overall, they will move in tandem. They will move in tandem. So that's PPG. So I'm out of PPG. QQQ, I mean, this is a losing trade. Maximum losses, there's nothing I can do on July at this point. September, again, we have to wait and see, right? It all depends now that we are shifting away from the inflation data and the Fed decision, we're going to shift over to earnings. SH, so question was, do I want to trim some of these hedges? SH, I mean, silver actually worked well, right? Even it continues to work well. So I'm still holding silver. I think that's another way to hedge. Either silver is going to continue going higher, right? And technology is going to sell off, or technology is going to continue rallying and silver is going to pull back. So I still think it's a good hedge. SH is inverse of spiders. For now, it continues to go higher. And TLT looks like TLT is also reversing, right? Just like and that's probably not going to last for too long either, right? Either TLT is going to pull back and break through the lows, or the equity market is going to reverse. So we'll wait and see. What else? What else? Question. I mean, I know the question was on digital currency. I mean, I know it doesn't seem like it's affecting the market. For very long, government did talk about, changing from paper currency to kind of a digital currency using, Bitcoin or, crypto, blockchain technology. I think at some point it will happen, right? Whether it's going to change our life in a drastic way, I'm not so sure. I mean, I know there's a lot of these theories that they're trying to control. I mean, I don't prescribe to any of these theories. So far, I don't see any effect in the market. And this is just news that's going to come and go, right? It's going to come and go. And if I think we're going to get rid of paper currency at some point. I think it's obsolete, right? We should be a digital currency at some point. because holding paper money, like I almost never use it, right? Unless I do give tips to valet, right? And everything else is Venmo and QuickPay, and very rarely do I use any paper currency. So, all right. Yeah, farmers insurance pulling out of Florida. Yeah, Florida is, getting the insurance prices are skyrocketing. We have apartment in Florida, and it's doubled probably, especially on the buildings near the water. So it's a problem. I mean, insurance in general is a problem everywhere, not just Florida, right? But so far, okay, hasn't had too much effect on the stock market, at least. All right, so we talk about silver, we talk about TLT, right? As some of your hedges. For now, I'm holding, right? Silver, I'm holding. Well, silver I trimmed because it rallied. TLT, I'm waiting, right? I'm waiting to see what happens next, since we kind of make or break the market scenario. And then XLF, still bearish on XLF. I mean, it has been underperforming other cyclical names, which doesn't make sense, but we do have a breakout, right? You do have a breakout today. I mean, it's all about earnings, right? We're either gonna, hit year-to-date high, right? If the earnings are stronger than expected, right? Or it's a false breakout, we're gonna reverse down and drop. So that's banks. Those are all the positions. Any other questions? Apple is at high of the day. Yeah, so Apple looks like it's recovering most of its losses. Let's see. Apple, yeah, the position is profitable. So probably want to try to close it. Let's see. We're up 10%, 340 right now, 330, 340, maybe another 370. Okay, I'm gonna try to close it at 370. Thank you. All right. Discord guys, thank you for participating. Appreciate it. And find all the recordings here. All right. Kevin, yeah, Biden may be rolling digital currency. I think digital currency is good, but I mean, obviously there always could be risks. I mean, government prints, paper. I'm sure it can print digital, create more of these currencies. I don't think it's going to be like a blockchain, like, there's only so many Bitcoins out there. They're going to print digital currency. It's not going to be, so. All right. Questions, suggestions? Yeah, looks like Apple strong rebound. Let's keep look at all of our AI stocks. Microsoft bouncing from this key support. This 50-day moving average is becoming even more pronounced. Support Google. Yeah, so Google is up, trying to get above 200-day moving average. Tesla, same thing, up 1%, and Meta kind of doing its own thing, continues to post new 52-week highs. Not 52-week. Well, yeah, 52-week high. Yeah. Any questions? So trading at session high, 447. Blockchain stocks trending up. Thank you. Yeah, block looks like vertical shift up. Approaching this overhead resistance from almost 52-week high. Thank you. Rivian is dropping from the open. Okay, I mean, it's a vertical rally, right? Elevator up. Looks like it's pausing some of its movements. SoFi is still up, but I mean, it's losing momentum. Let's see how Pelletier is doing. Pelletier kind of retesting, double top, AI, triple top. So it looks like it's AI stocks are underperforming, right? We have companies like MasterCard is breaking out, Visa breaking out, right? So kind of traditional rotation to more cyclical names, right? AI stocks have led this rally. People are looking for the new leaders, which are cyclicals, right? Caterpillars of the world, Visa, MasterCard. What else was there? MPC, Fortinet. Looks like Fortinet is also rolling over. MPC. Yeah. So it looks like MPC is breaking out. So energy, steel, credit cards, banks, right? That looks like strong momentum. It looks like some of the technologies slowly rolling over, but let's see for now. Yeah, I mean, you can see that small caps. So it looks like at least ARK start. We will see. It's too early to tell. I would wait till end of the day, but looks like it almost closed the gap. All right, 856. How the small caps are doing? Looks like small caps slightly pulling back. Spider is still at session high. QQQ rally is intact. VIX dropped back to 14. looks like 30 yield is not moving that much. Mostly it's the belly of the curve, 2 5/10 that are moving the most. Right, 2 continues to drop, 5 continues to drop, and dollar continues to drop. Yeah, I think you asked Jeff, right? There was a support ticket about Spotify technologies. This thing. I mean, it's trading like ARK stock, right? I mean, negative earnings, $128 million, $31 billion company, mid cap, right? Mid cap, Spotify. It's still pretty bearish chart, right? I think just in general, right now, it's kind of make or break scenario, right? You can see the technology, the AI stocks are pausing, right? They're not leading the current market. Cyclicals, your boring, Caterpillars and, Delta Airlines is what leading the market. So if this rotation continues right into this, an ARK, right? The ARK in general is trying to break out, right? So if this trend continues, right, then all these stocks that have negative earnings per share, right? If you have negative earnings per share, like risk on, right? And I would look at the high yield, right? High yield, I mean, for now, it's still sitting at, close to 52-week low and hasn't really made any breaks. So usually that's a proxy for risk appetite, right? So companies like Spotify or ARK, for this breakout to continue in the next few months, we have to have a rapid move in high yield, right? This is still a head scratcher, right? Like, why is, if we are truly in a bull market and inflation is down and Fed is going to start lowering interest rates, why are we not pushing high yield higher? So for now, that's a bear argument, right? But if high yield is going to start moving vertically higher and ARK is going to start moving higher, then Spotify will follow, right? Spotify will follow. We did have a pretty strong move in ARK, basically retesting, or it still hasn't got to last year August high, right? So we still have a little room, another 10% up. So it has been underperforming. High yield has been underperforming. Right now, everybody is concentrating on cyclicals and, mega cap, high cash flow companies. So if rotation continues and we are in the true bull market, obviously they will rally, right? They will do the catch up at some point, like this week. This trend will continue. If we're not in true bull market and earnings are going to be, not up to standard, then, market is going to reverse. So right now, I mean, the argument is to be more cautious, right? If we do have a break, like a sizable break next 2 weeks and better than expected earnings, we have like this type of action, right? In the next couple of weeks, then, bears are wrong, bulls are right, and, and we're going to have rally across. Right, people are going to do a catch-up trades, right? Whatever hasn't rallied 40%, that's where people are going to start rotating to. And probably Spotify would be one of these companies. IWM, nice breakout. Yeah, so it looks like small caps are trying to break out. It's facing a lot of overhead resistance. It's still underperforming. Still pretty far away from August high of last year. So it has been underperforming. Again, it's doing a catch-up trade, but yes, it looks like it's trying to get back to August high. Keeping the interest at where it's now or lower, good for financial and tax. Genevieve, in terms of interest rates, yeah, so looks like very strong move in interest rates to the downside, right? Belly of the curve, 10 to 5. That's the assumption, right? I think still Fed is probably going to raise interest rates in July, right? But they can do the same thing. They can say, listen, let's pause, not do a rate hike in August, right? And then they skip, I think, months. Next one would be, I think, October or November meeting, which would be, we're going to have a lot of data. So that could be, that's the plausible scenario, right? So far, the yield, the correlation has been the opposite, right? Higher yield is good. That's why market rally, because the idea that, we're not in recession. Lower yield is actually not good for the economy, right? For the market, the correlation. So the drop in yield and rise in treasury, right? We can't buy treasuries and buy technology, right? We said that cannot last that long, right? Either the interest rate is going to start rising, right? Especially normal, maybe 2 years is going to continue to drop, but 30-year is going to start rising, and 10-year is going to start rising, right? We have a yield curve that starts looking like this, right? So then that's the bull market. Right, this would be a normal correlation, but as long as we still have this, well, that's then that's not normal bull market. So I think right now the most important is actually a dollar, more important than even the yield, right? Because if the rally in cyclicals is highly correlated to drop in the dollar, and it's sitting, to the penny basically on year-to-date low. No, 52-week low actually. We've been here in April of 22. To buy gold would be a stock in that long. What if you want to buy gold? Will be a stock, and is that? Well, gold are usually GLD. Right now, I just did silver, so this is another divergence. Like, why is gold continue to rally, right? And silver is rallying together with the market, because right now everybody's digesting the data. Right? I think gold and silver are going to continue going higher, and technology is going to sell off. If I'm wrong, then it'll be the opposite. Technology is going to rally and gold will sell off, right? But I don't think you're going to have moving both for a very long time. Election, yeah, but we do have a broad-based rally today for sure. It's a good sign for the bulls, right? That's the bull argument that for the bull market to continue, we got to rotate into cyclicals. Well, now it's earnings season, right? Now we have to figure out the earnings season. You can see kind of industrials looks like, right, reversing. Spider still session high. For now, I only see maybe industrials reversing, like PPG. And Delta Airline is reversing. UNH has been bearish. Pepsi. We'll see. Yeah, I need to give people to digest the news, right? So it's going to take a few days. Days in a row. DraftKings looks like you are trading some stocks directly and others options. What is your decision factor for this? So Jack, thank you for the question. I tried to do both stock and options because we have subscribers that do both and options. Stock, usually I do from aggressive power trader, right? Or active trader on Tradespoon or weekly power trader, right? So these are the example of the stock trades. Options, I do dynamic. Criteria for options are a little bit stricter, right? I either trade stocks or, I trade either ETFs, like I have position in XLF. Right, I'm looking for something liquid. Right, I'm looking for something liquid that has tight bid and ask, has volume, and preferably somewhere around $100 or less. Right, because the average account is $10,000. So if I'm buying one contract of XLF, well, that's $3,400, right? $3,400. If I'm buying one contract of Tesla, well, that's $27,000, and most people don't have that. Would be too much exposure for most accounts. So when I do options, I try to keep underlying stocks, under, it's close to 100. I mean, I did Apple, because it's a well-covered name, liquid and strong uptrend, and I do it as a spread, so I am limiting my losses. But still, 1% move in Apple and 1% move in XLF are completely different exposure. So that's the criteria. With stocks, some like PPG, PPG is not the most liquid name, but because I'm holding it for a few days, I'm okay with it, right? I'm okay that it's only 1 million shares being traded on average. All right, any other questions? Thank you, Jack. Snap. Snapchat, maybe. I mean, it does look like sorry, it's 1 hour. Let's see, 1 week. I mean, to me, they all look like ARK, right? Snap, ARK. When you have these negative earnings per share, the earnings don't really matter how negative your number is. It needs to be getting positive. Like Pelletier, right? This was a classical example where 1 quarter they were positive, they turned positive earnings per share. 2nd quarter earnings per share, I don't know if it's still positive or negative here. It still shows, well, trailing 12 months. But at least forward-looking, they're positive. Forward-looking, they're positive earnings per share, and then you have outperformance. I mean, granted, they're mentioning the word AI a lot more often, but so can Snap and Spotify, right? They're also going to mention, AI. So, but Snap, Spot, and Spot looks better to me. ARK, I mean, charts are the same, right? Charts are the same because, Robinhood, I follow Robinhood because I understand brokerage business, but even Robinhood, the charts look identical, right? When you buy, just be careful not to buy all of these small cap or mid-sized cap that got beat up a lot, right? That's the natural tendency. Let's buy Robinhood, let's buy Spotify, let's buy Rivian, but they all behave the same way, right? They all behave the same way. So if you want to buy one because you think we're in a bull market and bears are going to capitulate, buy one of these stocks. I won't buy all, or just buy ARK. I think ARK is good proxy for risk taking, right? It's a good proxy for risk taking. Right, Kevin, earnings yes. Who take lead in rotation of sectors? Well, right now, all cyclicals are kind of leading, except the banks. Banks considered to be cyclical. But you can see industrials are trying to break to the upside. They're rolling over, right? Only 30 basis points higher. But, they were the leader of cyclical names, right? They're at multi-year high, all-time high. They're posting all-time high. Right, so XLI is one of them. Transportation, right, like Delta Airlines of the world, still approaching, all-time high at multi-year highs. So transportation, industrials, what else? that been leading. So these are probably the main one. Well, home builders, sorry, home builders. Right? Home builders are almost multi-year high. So home builders are one. Materials too, right? Materials are close to the multi-year high. So materials, home builders, industrials, energy has been underperforming, right? They are usually cyclical. So XOP has been underperforming, right? It's pretty far from all-time high, or XLE has been underperforming. Small caps considered to be, cyclicals, but underperforming, and banks are underperforming. So right now it's this, right. If we're in a bull market, people are going to start buying things that have been underperforming, small caps, banks, and you can see already that industrials are losing steam. Right, they're only up fractionation. It's actually turning negative today. Right, it's losing momentum. How's Carnival Cruise doing? Carnival Cruise is losing momentum. Right, they're negative. Why are they negative today when inflation is down and wages are up and people should be spending? Because people are trying to play a catch-up trade. Catch-up is probably going to be in small caps in banks, assuming this rotation is going to continue. That is contingent upon dollar. Right, we're trading right at the height of the pandemic, a little bit below that here. If that level will hold, then then the market will reverse. If that level doesn't hold, we're just gonna it's a pretty big move this week to the downside. If all the bears gonna get washed out and bulls are gonna step in, then the equity market is gonna roll over. If the other way happens, if dollar bears are able to push this lower, then then the rotation will continue on, and you see banks next couple of weeks going to start rallying, and small caps are going to start rallying. Carmen, gold and equity is not a very, gold sometimes behaves as a hedge, sometimes it behaves as a metals and materials, right? This year, gold acted as a hedge, right? So I think it's still acting as a hedge this year. Especially in March, right? When we had a pretty big sell-off in March, right? A lot of these correlations change after liquidity issues in the regional banks. So when we had liquidity issues, everybody started going into gold, right? All the way till beginning of May. Then we have generative AI, right? Everybody said, okay, recession is not here, and generative AI is going to produce boost in the income. Everybody sold off gold, right? Everybody sold off gold and started buying AI stocks. Today, this week we have a pretty big rally in gold. I think it can only mean one thing. Right now, people are digesting the news. In the next couple of weeks, either gold is going to be at 190, and QQQ is going to, and equity market is going to, this is just a false, move, right? So right now, it's acting as a hedge. I mean, Carmen, so when is a good buy? I personally, depends on your position. So I trimmed silver position today, right? Silver and gold usually are highly correlated, right? One can outperform the other, but they're highly correlated. I trimmed silver position because, I mean, I'm using dollar cost average, and I had a nice move to the upside. As I said, I don't, my personal opinion, I'm bearish on the market. Right, but timing it is very difficult. Right, every time I tried to time in the past few months, it's been kind of going the other way. So I'm not going to try to time it, but I do think longer, in the next few quarters, in the next few months, silver and gold going to continue rally, and equity market is extremely overbought. Right, just because CPI data is trending down, that doesn't mean that Fed is going to start lowering interest rates, right? Until Fed is going to come out and say, listen, we're out of the woods, and we're going to start lowering interest rates, I don't think you have a green signal, and they haven't done that. As a matter of fact, in July, he's probably going to sound hawkish again, because in reality, wages are going up, right? They're not going down. And the consensus is, unless wages go down and unemployment goes up, you're never going to reach this 2% target, right? I mean, we will have, it's going to trend down, CPI is going to trend down, but we're not going to reach 2%, right? I mean, CPI, core CPI. And year over year is going to have a difficult. Right now, the bar is set low. So year over year, not going to be 2%. Core CPI year over year is not going to be 2%. That means, Fed is not going to lower interest rates. Kevin bought Pelletier. All right, very good. What was the position test when she bought before IPO? All right, Kevin, thank you. Buying Pelletier. It's been doing. What do you think of URA long term? I mean, there's a lot of movement in clean energy. Oh, I don't know. Uranium is not a clean energy, but I mean, the original move was due to the war in Ukraine, right? Now it's kind of trending down. So I don't know about uranium, right? In theory, everybody's shutting down the nuclear stations. So I'm not, for now, it looks like the price looks very bearish. So for now, uranium looks pretty bearish long term. Gold versus GDX. GDX is a lot more volatile. I mean, charts look similar, right? GDX rally, gold rally, GDX rally, a lot more than gold. Again, very so it just depends if you like volatility, right? If you like volatility, you'll buy GDX. If you don't like volatility, it's like triple leverage ETF, right? Think of this way. GDX will always move, 3 times more than gold. So, but in theory, their stop level should be similar, right? Here, you don't want to be down more than $250, right? If it drops below this level, or you can say this level, right? For GDX, you can say if I'm down 27, I want to be down. I want to be out, right? So it's $4. You can maybe buy, I don't know, 50 shares, right? 50 times 4, $200. So that's GDX chart. Gold, similar price pattern, right? You probably say, well, if it drops below 200-day moving average, I want to be out. That's 11 points, right? So you can buy, 20 shares. So which one is going to outperform? I mean, it's hard to say, right? Thank you, Fred. Carmen, thank you. All right, guys, 9:20. So far, we are at session high, right? QQQ continues to rally and make new highs. So QQQ is up, making new highs. Spiders are continue to make new highs. All eyes on earnings season. All right, that's all I have for today. Thank you very much and have a great day. Thank you.